Hi, everyone, and welcome to this episode of Crushing Land. Happy to be with you here today. And today we're going to talk about a subject that a lot of you struggle with and that a lot of you ask right from the beginning. And of course, it's something that you ask from the beginning. Why? Because it's the starting subject. And that is, how do I pick an area to market to? And this may seem like a confusing subject or a weird subject to be talking about on this. For anybody that's watched any of the trainings that I've done, the free trainings or anything like that, you've seen that I've gone into how we pick an area. But it's actually coming about today because I had a conversation with somebody yesterday that has been through not one, not two, but three different coaching programs for land. And yet this is something that he still says he has never really been shown right and is struggling with. And we were taking some time to go over that yesterday. And so what we're going to do today is, rather than me go over exactly how I pick an area, we're going to go over some of the different things that are being said out there when it comes to picking an area. And we're going to use some common sense to kind of backtrack on those and see if it makes sense or not when looking at an area. And what I'm going to encourage you guys to do as we're doing this here today is, as I'm asking these questions, if you're watching this on Facebook, if you're watching this on YouTube, go ahead and just write down what you think. Type it in the comments. If you're listening to this on podcast, then that's fine. You can make a mental note. But if you're a little bit more interactive with this, it'll help you in actually ascertaining and coming to a good conclusion regarding things. So when it comes to picking an area, there's a lot of different information that's out there. And he was going over some of the different things with me yesterday that he's heard. Obviously, over all these years of doing this, I've heard a lot of different things taught as well. And so like I said, we're going to do is we're going to talk about a few of these different strategies, and we're going to see if common sense tells us that it's a good idea or not when it comes to picking an area. So first off, one of the things that's taught pretty regularly out there is looking for certain things. I've heard people say that, if there's an interstate and a Walmart, those are the two things that they talk about. If there's an interstate and a Walmart in the area, that means that it's a good area to invest. Well, if there's an interstate and a Walmart, it means that there is some sort of infrastructure in place in that area, but that's really all that it tells you about that area, right? So that being said, is that enough information alone to say, well, that's a good investment area? What do you think? Is having those two things there good enough? Well, let's see what we know about those two things. First, Walmarts. Where are Walmarts located? Well, in reality, Walmart, when they decided to go out and start putting their stores out, decided that they were going to kind of break the normal trend that all these other businesses and all these other companies did. Kmart, other stores that existed at that time, basically were shooting for populations of 50,000 and up. And Walmart said, well, we're not going to do that. We're going to focus on going to rural America. So Walmart, going to rural America at that point, has put their stores in locations that are a lot more off the beaten path compared to what other stores were located in. And so, for example, where I grew up was a very small town, only a few thousand people, and that area had a Walmart. Also, where my wife grew up, a very, very small town, also had a Walmart. What else existed in both of those areas that we grew up in? You guessed it, an interstate running through. So those two factors alone are not enough to tell you that it's a good area to invest in. Now, I will say that the area that I grew up in could work for land investing. It wouldn't be ideal for other reasons, but as far as the population and the growth and things like that, it would be okay. Where my wife grew up, absolutely not. Had a Walmart, had an interstate going right through it, but a small little area. She grew up in this tiny little town, and it was the county seat for that county. That county would not have made sense at all from a land investing perspective. Yet it had those two elements. It had a Walmart, it had an interstate going right through it. So, and you think about different things when it comes to interstates as well. If you go out and you look at an interstate and where it passes through, I mean, just look at a map and you can see that interstates go through so many rural areas that are just connecting cities. I mean, interstate is literally that, right? It's designed to go through different states. And the way the interstates were designed was designed for the military so that they could transport things easily. So it was how to get from one point to the other as quickly as possible. So that being said, it doesn't necessarily mean that what's along that route is the best thing that you should be looking at for investing. So looking at those two things as your sole thing, hey, if there's an interstate there and a Walmart there, it's good enough. No, that's not true. It's not something that you want to be looking at. Okay, another one that some people have heard is you want to look at a city and you want to see what its growth plan is over the next 5, 10, 20, 30 years. That in itself sounds good, right? And I've used that strategy. So is it a sound strategy? The answer is it can be. All right, it can be. But what does common sense tell you about this strategy? Well, if you think about it, it means that you are limiting yourself. You're limiting yourself to areas that actually have that type of thing in place. So any major metropolitan area is going to have that. But the minor cities do not. They may have some plans in place for what they're going to do, but they do not have these huge master plans out for years like the major cities do. So if you want to be looking at areas outside of Dallas, Texas, and you want to be looking at areas outside of Chicago, Illinois, and outside of Boston, Massachusetts, and outside of San Francisco, California, and cities like that, these major players in the country, these major areas, then that strategy could work as you're seeing where they're growing. And obviously some of those areas are far and away from the city now because of how much they've already grown. So as you're looking at that can work for seeing where these things are going to go, what their growth plan is over the next number of years. However, it doesn't work in smaller cities because they just don't have that plan in place and they're not going to grow at that same rate. And so because of that, you can't use it in those areas. And in reality, those areas are sometimes some of the best to invest in. Whereas these major markets, even getting just a little bit outside of them, you're still just outside of where the current major metro area is. And so because of that, it's not a great strategy for looking at things because one, it's already super populated. It's already a lot of people flooding there. There's already a lot of competition and things like that go with those major areas. And again, where I live now, I live just outside of a city of only 100,000. The major metro area is only 300,000 and yet done very well investing in this area. So it helps you to see that strategy, common sense again, is telling you it doesn't always work there. And even those other cities that I mentioned, they, like I said, it's so far away from them now. It's really not in that, they really don't even fit that category anymore. Where you're really looking at that is these cities that are out in the middle of nothing, and they are just expanding from their current nucleus and going further and further out. Your Houston, your Denver, Colorado's, your Phoenix, Arizona, a city like that. Those are the ones that it's starting. And we're already seeing it in both of those cases where Phoenix has this plan and has been growing out, and we've seen it over a number of years. Denver's doing it more north to south, and we're seeing it that way as well. So again, it's not a bad strategy, and it helps you to find certain areas, but it's very limiting, and you're also putting yourself into more competition. All right, another one that's been said is that they don't look at anything. I literally heard somebody say this that's teaching this. They said they don't bother looking at all the details except for one thing. All they do is see if the area is growing. If the area is growing, they will go and they'll invest there. What does common sense tell you? Do you think that's a sound strategy or not? We talk about growth, so is that good enough? Well, what's the problem with looking at only growth? You have no idea what the growth is. You could be in the hottest growing market in the entire country with insane competition and insane prices, and trying to get deals at 90 cents on the dollar is impossible. Or you could be at an area that's grown this much and it's under 1% growth and it has grown, and you go look at what's out there and everybody and their brother is trying to sell their property and there's 500 properties for sale, and yet in that time only 50 of them have sold. They're both growing, but it doesn't mean that they're growing at the same rates. One could be an area of 1 million people and one could be an area of 1,000 people. You're not looking at any other parameters. And so if you're only focusing on growth and saying, well, it's growing, so that means that there's buyers there, that doesn't really make sense, right? You just don't know that. Yes, there's people buying there, and it means that more people are moving in than moving out if it's growing. But what those numbers are in relation to each other, what the population is, how many things are actually for sale, how many have sold, all of that, you're not looking at any of that. And so because of that, you could be setting yourself up for disappointment. And in reality, the person that shared that was basically somebody that hasn't been doing this all that long, has only seen it in a single market, a hot market. And so obviously in a hotter market, when you're offering much higher percentages to try to get a deal, that strategy, well, it's still not sound, still works a little bit, right? But as the market starts to shift, as things sit longer, all of that, as we're starting to see now, then that strategy doesn't work at all. So when it comes to picking an area, you don't want to make it overcomplicated, but you also don't want to undercomplicate it, right? You don't have to look at all of these huge parameters, but at the same token, you want to have some parameters, right? And so if you look at it again from the common sense standpoint, right? Should the area be growing or should it be declining, right? You know the answer to that. If you look at what's out there, should you see some sort of balance in what you see for sale and what you've seen sold? Or does it not matter, right? Does certain infrastructure matter, right? That one can be a little confusing because people will say, well, it does seem like there should be an interstate highway there or something like that. And infrastructure doesn't necessarily mean interstate, right? So there's interstates that go through a lot of areas that are completely barren and nothing that you would ever invest in. And yet we've done well in certain areas and certain counties that have no interstate going through them, but it still has infrastructure in place. So again, different things that you want to look at when picking an area to get yourself the best bang for your buck, have the best results possible. Don't overthink it, but don't underthink it as well. Thanks for joining us. We'll see you next week on Crushing Land.